history teaches us, even if we are in a horrible market temporarily, as long as we have the ability to hold on to what we believe are high quality stocks, the market forgives and makes us profitable. Hey guys, Omar Khan here from Theta Trading, and today we're going to be talking about, is the stock market going to crash? Who knows? We're going to get into some data, and we're going to see what history teaches us. Before we do that, if I could ask you guys a favor, if you guys could hit that like button, hit that subscribe button if you enjoy the content that we are creating, and also give us a comment. What would you like to see? We're trying to get to 1,000 subscribers. Love to get your help. I think this is the best investment strategy in the world, and I want as many people to know about it as possible. Markets and environments change, but this strategy, in my opinion, is fantastic. I want to teach as many people as possible. If you'd like to learn more about what we do here at Theta, go to thetatradingco.com or book a call with us. And we'll post a link there if you want. Book a call, see what we do. Now, let's get on to today's topic. Is the stock market going to crash? Well, I want to share a few things with you, okay? First of all, the simple answer to that is nobody knows. I don't want to waste your time and say, I know the answer. Nobody knows the answer. Not even Warren Buffett. Nobody knows the answer. What we do know, however, is let's take a look at what history tells us, okay? Now, one thing that you want to do, and it's very difficult to do psychologically, is that when there is the most amount of fear, that's when you want to be greedy. So when you see people freaking out, panicking, stressing, the world's coming to an end, that is going to be the time that you're going to get the most opportunity, okay? And that's not meant to be specific investment advice. That's just a generalization. When fear is high, as Warren Buffett said, when others are greedy, be fearful, and when others are fearful, be greedy. Okay, now let's take a look at what history teaches us. How long do bull markets last? Meaning, how long do good markets last, and how long do bear markets last? Let's go back to all the way 1924 here. And again, this is evidence-based, okay? So we can see here, we've had huge run-ups. Now, all those orange or yellow are bull markets. Now, you can see underneath here, these are the bear markets. No, excuse me, they're the blue parts underneath here. If you can see my button, my cursor, these are the blue parts. Now, you can see sometimes the markets can get really bad. Now, this year in 2022, the S&P 500 is down 25% from peak to trough. It's been a horrible year. Horrible. And you know when I know that things are coming to an end? When everybody gives up. And that's called capitulation. When nobody wants to invest anymore, the world sucks, stock market sucks, I don't want to think about this crap ever again, I don't want to invest ever again. That's the time when you're going to get the best opportunity, and I know how hard that is to do psychologically. That's when you get the best opportunity, but that is called capitulation, fear. So what does history teach us? When you have these mammoth declines, like we do now. I've been investing since the late 90s. This is the third worst one that I've seen. 2001 was terrible. That was mostly confined to the technology space. 2008, 2009, global credit crisis. That was horrendous. That was worse than this one. And now you have this one here, which is inflation / COVID / ramifications of it. The world changed all of a sudden on us. You know, a lot of money printing, a lot of inflation. Now the word of the day is inflation. The markets don't like uncertainty. But what we do know is this. Every time you have had one of these huge declines, okay, look what it's been followed by. So right now, I told you, we are negative 25% approximately on the S&P 500, okay? So let's take a look at this lineup here. Oh, sorry about that, I keep doing that. Average loss in a bear market, okay, 34%. We're not that far off. The NASDAQ is actually down more than 34%. Average length of bear market, 14 months. We are in 11 months here coming into October. The market started retreating last November. Now, let's look at the average gain in bull markets. 110%. Average duration, 37 months. What does that tell you? That means there's a lot more good times than bad times. Why? Because humanity keeps moving forward. This is why we implement our strategy. We agree to buy high quality stocks. We get paid a lot of money for it. Worst case scenario, we own that stock. It's a good spot to be in. Why? Because history teaches us, even if we are in a horrible market temporarily, as long as we have the ability to hold on to what we believe are high quality stocks, the market forgives and makes us profitable. That's what history teaches. Now, I'm not saying that's specific for every company that one is invested in. But this is what the market tells us, that even if your timing is wrong, because nobody's timing is right. Even Warren Buffett can't get timing right. So don't kick yourself or get all upset. Oh, I should have seen this coming. Nobody gets timing right. It's impossible to do in the long run. Now, if Warren Buffett can't get timing right, why do we think we can? We can't. It's tough. I've been investing for 25 years. You never know when the top of a market or bottom of a market is. Nobody knows. Okay? But here's what you do know. You get these massive negative returns. And what follows historically are monumental returns for an extended period of time. That's what we can take from this. When it'll be over, nobody knows. Will it be like this? Again, nobody knows. But history tells us that the markets have always gone to an all-time high, and this is what the evidence is. Okay? So now let's take a look at this, okay? Again, another iteration of this bull and bear markets. You can see how long they last, duration, bull markets, bear markets. You can see that bull markets, length here, okay? You can see the length of bull markets, okay, or bear markets. Some of them can be quite long. And look how much longer, how much more performance you get out of a bull market than you do a contraction in a bear market. And this is going all the way back to 1932. So the blue being the bull market's cumulative return, and the orange, or yellow in this case, I would say it's orange, is the cumulative return on the downside. So when you're in the middle of a downside, like we're in now, negative 25, it feels like the end of the world. It feels like, oh my God, this is never going to stop. Things are getting worse. The media is talking about a further recession, more inflation, this word called stagflation. I don't even know what the hell that means. And this is all that's going through people's head. They're like, what the hell does even stagflation mean? All I know is grocery prices went up. What the hell is going on here? All of a sudden, the world's falling apart. Housing prices are falling precipitously. Lending is that much more difficult. Borrowing costs are higher. But remember what history teaches us. In the midst of all that fear is generally when the best opportunity presents itself if you have money. And if you don't have money, this is why we stick to our strategy. So that the worst thing that's going to happen to us is we can wait for what we know has happened historically, an eventual recovery. Okay? Now, I want to move on to my final slide here. Okay? And I hope you guys are taking a lot of this. This only goes down to 2022, but only back to 1987. Excuse me. Look at where this started. Okay? Now, this is MSCI, Morgan Stanley, All World Index. Okay? So all the countries in the world stock markets all combined into one. Okay? And they're just using a thing here. Now, 1987, okay, in October of 1987, there was a massive market crash. It was before my time, but it was a huge crash in one day, almost 30%, or I believe it was a little over 30%. It was horrible in one day. But the market, what did it do? You can see that right there, the bottom here. The market eventually recovered. And then what I want to point out here is when the media is scaring you and telling you the world's coming to an end and things are going to get worse and this is going to happen and that's going to happen. Remember, their crystal ball doesn't work, just like anyone else's doesn't. Right? What they are trying to do is scare the shit out of you. And they're really good at it. They're really good at scaring us, the investor population. Okay? But remember what history teaches you. Look at the recessions, all the wars, the collapse of the Soviet Union, the peso crisis, the Asian crisis. I don't know if any of you guys remember Y2K. Planes were supposed to follow the sky. Another Gulf War, SARS, swine flu, the global financial crisis, the biggest decline there was that I've ever been around, right? 9/11. Look how many things have happened in history. And what is the media telling you? Oh, things are going to get worse. The world's coming to an end. But look at the starting point there at 100, okay, in 1987. And you can see even in 2022, you're probably around, over 1,000. You've 10x your monies in that time frame. But what did the media tell you? The media told you the world was coming to an end. Things couldn't get worse. Things are going to get worse. Things are going to get horrible. I don't know what's going to happen. What do we do here? Don't listen to their nonsense. It's good to be knowledgeable about what is happening in the world. But really trying to time the market in the short term is a very difficult task. Nobody gets it right because anything can happen out of the blue. And the way that we invest here at Theta is we leave ourselves in a worst case position where we own a high quality stock. We write puts on it. If you want to know more about what the strategy is, take a look at some of my previous videos. In my opinion, like I said, game-changing, lifetime-changing strategy. The reason I want to leave myself in a worst-case position where I own stock in a company I like is because I can wait it out. As Warren Buffett said, what is the first rule of investing? Don't lose your money. What's the second rule? Don't forget rule number 1. Well, I haven't lost any money if I haven't sold my shares. Right? And my positions are down huge this year. But I'm not selling. I don't need to sell. In fact, I've written a lot of covered calls this year, so I've actually generated a lot of capital. But I am down substantially this year. But I know what history tells me. History tells me the markets have always gone to an all-time high. Now, is there any guarantee that'll happen this time? No. But I'm comfortable with that level of risk. And that's why I invest the way I do. The Theta way of investing, in my opinion, guys, is a great place to put yourself in. You know, if you agree to buy a bunch of Apple stock, theoretically, and the markets get hit, well, the worst thing that happens to you if you own Apple stock, as long as you like it, of course, and you believe in its long-term trajectory, and if you've done the homework on it, you could be yourself, you know, even if it goes down to that 27%, you're not going to beat yourself up over it. It could go down another 20%, could go down another 15%, you don't know. But you're okay with that level of risk because you understood what you bought. So remember what history teaches. So is the stock market to crash? Who knows? As long as you can avoid a margin call, which you should always be able to do, and you believe in the companies that you've invested in, then your job is to remain patient and hopefully be able to even add more when fear is highest. Hope you guys like this video, guys. Omar Khan here from Theta Trading. Hit that like button, hit that subscribe button, and also let us know what else you'd love to see. Thanks for listening, guys. Take care and talk soon.